Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
It's vicious, it's cunning, it's scheming, and downright dirty. It's like a PPC board meeting. Welcome to the most vicious, unrelenting stock-picking league on television. This is Share Shootout League right here on CNBC Africa, first in business worldwide. I'm Bruce Whitfield. Now, is it true that Leon Kirkinis has been hiding in one of those tin kitchen units at Ellering's because he knows nobody's going to bother him there while they do the business rescue, close down the place thing that they're doing at the moment? And why does Sanral think South Africans would buy their retail bond when they don't want to even buy e-tolls? And by show of hands, who's glad that Eskom doesn't manage the sun? Now, we don't know the answers to these baseless questions. What we do know is that the league is slowly but surely coming to a close. Just take a look at what happened on Twitter regarding the match between Running Dog and Bucks. Bucks wiped the floor with the newlywed Running Dog. Clearly, he was a little outrun that day. It was nice to him during the match, but he annihilated him on Twitter. And of course, he's not shy of lobbying quite a lot. A small consolation for the Running Dog. Although he lost, he still keeps his fourth place on the log. That's why it's important to get the great start in the league, in life, and in any kind of race, of course. Just have a look at the league. At the bottom of the league is Neo, the one. He needs your votes tonight, but you decide who will win the match and ultimately who will walk away undefeated. All you do is you follow at SSO League. You tweet any of the stock pickers' hashtags. It's as simple as paying Ellering's nearly 600 million rand debt to the big four banks and Investec, of course, as well. Back to the match at hand. Our first stock picker came from a bank that talks savvy, but far from Twitter savvy. He's up against the most quoted retail analyst in last week's business papers. I give you the players.
Now Kgantsi, portfolio manager at Nedbank Private Wealth. We are a valuations-driven house that aims to create wealth for our clients on a need-based basis, especially those who take a 3 to 5 years view on the market. I will try to, show my knowledge of the markets, keep to speed, with companies and also with my competitors, and also try to make sure that I stack up to the competition. Christopher Gilmore from Absa Wealth. I think so, because I've been in the game for some time, and, my knowledge of the markets and companies is very sound. So I think that I stand a very good chance.
Vianello. I'm an independent investment analyst and investment advisor. I like looking at themes. I devise themes to suit the particular investment climate, and I try investing in companies which fit into whatever theme I believe is appropriate for the business cycle at any one particular time. At this point, I don't have a game plan. This is the first time I'm in the competition, and I would say I would probably end up devising a game plan as we move along and as I get a feel of how things are developing. At this stage, I would simply say Sasha, simply because he's the longest serving member on the team, and he is a very experienced and very successful investment advisor in his own right. I wouldn't have entered if I didn't think I had a good or a reasonable chance of winning it. At the end of the day, it is a game and we're all here to have fun, but deep down, we all want to win it as well.
Well, both Neo Kgantsi, the one, maybe he should change his hashtag to the bottom one. From Nedbank Private Wealth, as well as Vianello, the Maverick, need your votes to move up the log. Neither is doing particularly well, so one of them will get 3 points from tonight's encounter and will nudge up the rankings. But first, the house rules. They've each picked 3 shares. Only I know what they hold. They're secretly on my device over here. They've got to accept at least one of the other players' stocks, unless they're nice like Sasha and like choose everything. Each has got 30 seconds to argue their stock pick. They can choose from the JSE. We give them an offshore allowance as well. We're terribly generous that way. The rules are out the way. Are you ready to rumble, gentlemen? Are you ready for a fight? Are you ready now to uplift yourself from the bilges?
I'm ready.
You're ready? Oh, he's ready to box, Sid. I'll tell you what, Sid, we're going to let you go first.
Am I going to go first?
I think you should go first. You're going for an interesting pick because you could go for the local version of this company, but you're going for the mothership. Yes. Why is it that you like Barclays PLC? In 30 seconds, tell me why.
Very simply, European banks for the last 5 years have spent their entire business time, writing off things that supposedly they did wrong over that period of time and before that. I think it's got to come to an end. I mean, eventually it comes to an end. There's nothing more that you can write off. And I think that with Barclays, and with probably some of its competitors as well, we've hit that point. And the moment you stop writing these things off, we'll have a nice, very clean bank. The share price has been falling for a long time, and I think we're at the bottom.
Now, the banks, international banks now, and you're in the banking sector, you understand banks very well. Sid comes out of the banking sector as well, so you guys are well versed in what goes on in the corridors of the banks. But Barclays has lurched from crisis to crisis to crisis. They sacked Bob Diamond, and they got rid of the chairman. They've got new people in, heavily reliant on Barclays Africa for profits. Is it really one that anybody should own?
I don't think that I would go for that one, especially if you consider that, you look at, interest rates, in the European zone. At the moment, they are operating at minus 0.15%, So banks don't really make money there, And then the other thing is that if you've been following the stress tests that were done, in Europe 2 weeks ago, of the 31 banks, that were highlighted, and Barclays was one of them. They had a total of about 50 billion euros, capital gap that they still have to deal up with. So I think that most of these would still be dependent on the European Central Bank to keep on buying most of the toxic assets away from them.
Well, as long as the European Central Bank keeps doing it, and the indications are that the European Bank will continue to do so.
Well,
so there's the underpin.
A, they'll continue doing it. B, it's true that Barclays have had all these issues, but as they've been cleaning up these issues, so they've been cleaning up their balance sheet. They've also made it clear they're not going to raise more capital. They will sell off more assets that they don't need in order to meet any shortfall in those contingency requirements. And for that matter, they could even pass the dividend, because, the fact that they've been allowed to pay a dividend, albeit 1 penny a share or something, it means the regulators are happy with the capital structure of the bank at the present time.
So Sid will take it, now shooting it down.
I'm shooting him down. I think that most of these European banks are still in a drip feed. They are not strong enough to stand on their feet at the moment, and they will still need, some capital injection going into the future.
Okay, you're shot down with that one, I'm afraid, Sid Vianello. The Maverick has been shot down. It's not the first time Maverick has been shot down. If you saw Top Gun, you'll understand the joke. Okay, right, let's have a look at you now. What an interesting choice. Generally, it's better to short a share when it is up here. You're shorting a share down here. Anglogold Ashanti has lost 35% of its value this year. Huge volatility. The gold price is slumping. You're anticipating that Anglogold Ashanti will fall further because you're calling it short after a big decline. In 30 seconds, back yourself.
Look, I think if you look at the average cost, of production, it's standing at about $1,144, dollars an ounce. And if you add refinancing charges, it brings you to about $1,200 an ounce. And they won't be able to survive if gold doesn't go about 1,350. And there's a company that has got a capex expenditure that would be going from $260 to $4,400 an ounce over the next 12 months. And they would be dipping into the credit facility.
It's an interesting one because, one watches the gold price and all the pundits are calling gold below $1,000 an ounce at Vianello. You've seen gold below 1,000. You've enjoyed it above 1,000 in recent years. Where's it going?
I don't know where gold's going. Maybe it's going nowhere. But what I do know is that the Swiss are about to vote. Now, we don't know how they're going to vote.
Vote on what?
They're going to vote, they have these referendums on buying 1,800 tons or something of gold. That's what I read the other day. And if they vote in favour, we know that the Swiss Central Bank is going to be in the market to buy a lot of gold and provide some kind of underpin for the price. The other factor is, and that's the other reason why I would shoot it down, is that at the present time, Anglogold Ashanti got a lot of mines. Some are profitable and obviously some are unprofitable. What will happen, it's a fact of life, they will close down mines that are unprofitable. It's going to happen with other mining companies as well. Harmony are talking about the same thing with some of them. In fact, Target, I think, has already been closed, and now one of the Cottonville mines has been kind of put into the same category where it may close. And as production closes down, what is left, I think, will become profitable. And I believe it just at below 100 rands, I don't believe it's going to go it's going to go sufficiently lower
to
justify my going short.
Okay,
Yeah,
there we go.
that is
Nao's wearing his poker face.
That is not now, because I mean all the mines that are earmarked for sale, they would sell them at a loss. And they've got huge capex expenditure that will be sipping a lot of cash, and their credit facilities are going. In fact, is the most indebted gold miner worldwide, with debt to equity standing at 123%. Now, if interest rates are rising worldwide,
if they are, and that's a big bet.
If they are, I tell you, they're gonna get their heads handed to them.
Okay, there we go. Now Kgantsi wants to go short. You're shooting down the short, though, based on the fact that we've seen the bad news priced in. That's your argument there.
That's my kind of gut feel.
There we go. Sid Vianello shooting it down. Let's look then at your second pick, Sid Vianello. It's a relatively small cap for you. Consolidated Infrastructure Group. 30 seconds. Tell me why.
Their core business is in electricity. In the reticulation, setting up reticulation networks for electricity, both in this country where they're heavily involved in renewable energy, and in the rest of Africa where they're involved in more conventional electricity. And I think the provision of electricity throughout Africa and in this country with renewables is a big growth area. Of course, from an investment perspective, with a big part of their business coming from non-South African sources, it also gives me a kind of an underpin for dollar-based earnings, because all that stuff done in Mauritius.
So it sounds cool. What do they do in Mauritius? Sorry for the extra time.
Mauritius is the operating structure, the head of the the kingpin part of the structure, obviously for tax and other reasons.
Okay, so you like Consolidated Infrastructure Group. There's a lot to like about it in our current environment, where I think we've got somebody on a bicycle at the moment pedaling just to keep our lights on. Yeah?
Exactly. I mean, most of these companies worldwide, I mean, China has got lots of them, and Israel, I mean, the fundamentals are solid for them, especially with the demand for energy increasing worldwide. So I would go with him on that one.
You'll take Consolidated Infrastructure Group. He's quicker than I thought he would be. Tell me something more interesting about Consolidated Infrastructure Group. It's a little-known company on the show anyway.
Yeah, look, it was put together it's been put together like the last 2 years, and their core business is providing electricity reticulation throughout Africa, where they have expanded, and in the Middle East, I think.
Reticulation we would usually associate with water, so it's the same sort of thing. It's the infrastructure, stuff that makes electricity
wires
flow.
And cables and all that sort of thing. And they also have another business in South Africa in the quarry industry, which they've actually expanded by making 1 or 2 acquisitions. And the quarry business is actually now, with believe it or not, things like Afrimat have also seen a nice turnaround in business. In other words, the bottom line is there are winners in the quarry business and they're losers. Yeah. And they're among the winners. And they saw a big jump in their profitability, and it looks like that's going to continue through rationalisation. So they got a bit of a sideline as well that's turned out to be quite a very profitable sideline.
There we go. It's a nice one to accept. Now you'll take it with both hands, and let's move on.
Yeah.
There we go. Now Kgantsi takes Consolidated Infrastructure Group with both hands. Let's go then to Nao, your second pick. Here's an interesting one. It's in the hedge fund space. It's also a bit of a wealth manager because it owns Citadel, and it's also recently bought from Hollard, didn't it? The stake in Cannon Asset Managers. Am I getting confused? You know what I'm talking about.
They did.
What am I talking about?
You're talking about Peregrine.
I'm talking about Peregrine. There we go. Now, Kgantsi, he knows what you're talking about. In 30 seconds, convince him that you know what you're talking about.
Well, he's already convinced that this thing, you're picking it up at a P of 9, and it's giving you a dividend yield of around 4.5%. The share price is closely correlated with the markets, and with the markets starting to correct, there may be a bit of weakness. But long term, this is a company that's doing very well because of its exposure to hedge funds, which would be able to generate positive returns irrespective of the market direction, and also wealth management, where they are making good progress there, and also in conventional brokerage.
Okay, but aren't the only people who make money in hedge funds the hedge fund managers, and the only people who make money in asset management are the asset managers?
They are the manager of the hedge funds, but interestingly, the biggest single source of profit of Peregrine is in fact Citadel, which is the wealth manager rather than the hedge fund side. But one of the other pieces of that empire is Stenham in London, and what I'm seeing now is Stenham is shifting its focus away from the syndicated structures which they've had for property and things like that, where they bought Go Global Properties and changing its name to Stenprop Limited, and consolidating all their property interests under a listed entity, which I think is going to become a major competitor in the South African market, in the South African space, where they will compete against things like Redefine International on the one hand.
There's some lovely property opportunities. We can get distracted and go down the property route.
It's a very interesting, and I mean, I don't know what your final pick is, but
don't pick it yet. I want to pick this over. Both of your guys have got an ex-colleague who's created Anchor Capital, of course. Peter Armitage has created Anchor Capital, and Anchor Capital since listing has doubled in value, and it's got a very strong trebled. It's 645 the last time I looked. It listed at about $3 or thereabouts. Did it?
At 2, yeah.
It's tripled. Jeez, bet Nedbank wish he made that much money for them.
Yeah.
And then Coronation, which has been a stellar performer for years. Now, their share price performances have way outperformed anything Peregrine has done in the last 10 years. So why is Peregrine going to outperform those two?
Look, I think the trick is that, if you look at Coronation, last year their earnings were up 69%. And they do well because most of their fees basically are profit linked, you know. And they said that with the market starting to get expensive, it's very difficult for them, to replicate the same performance, that
they say it year after year after year.
But I think that is a realist view, that 69% growth, you cannot be able to do that, a few years running. So I think that at the moment, Coronation stands, the high risk of underperforming or maybe staying stable. But Peregrine, what a red hanger sale.
Peregrine, and you'll accept it?
I have some reservations, particularly on the fee structures in Citadel, where there have been a lot of complaints. But overall, when I look at the overall picture, and I don't know what the third pick is, but I'm prepared to buy it.
I think you may regret it. Well, let's see who will rise up like tax or flatline like the South African economy. The answer is on the other side. We'll see you after the ad break. But before we go, Sid Vianello, long on Barclays, shot down by Neo, who did accept Consolidated Infrastructure Group. And you'll probably be pretty glad he did. Although Sid is a deep expert in the next sector that he's chosen from, and then Kgantsi from Nedbank Private Wealth, Anglogold Ashanti, he went short in it. Sid maintains that the damage is being done and he wouldn't be shorting it right now. Peregrine, Sid has taken because he's checking of what's coming in the next round. This is CNBC Africa. You're watching the Share Shootout League, the only league without an association. But we have lots of associates, and this is match day number 29. We're edging closer and closer to the finale. Only your votes can change the look of the league. What you do is you follow at SSO League. You vote for either hashtag the one who is desperate. He's not begging yet, but he's desperate, and he's in desperate need for your votes. Look sad and forlorn. Look at, he doesn't care. Or the Maverick. That's who you vote for. And their shares so far this evening is Sid Vianello going for Barclays and Consolidated Infrastructure Group. Barclays PLC, that's the UK listed entity. It's been shot down, but Consolidated Infrastructure Group accepted. Neo went for Anglogold Ashanti short, shot down. Peregrine long, accepted. Now, this round you go first, and I'm thinking Sid's going to regret taking Peregrine because your next one is a favorite. It's a juicy one. You're using your offshore allowance. You're taking your Barclay card with its Visa branding, and you're swiping it. You like Visa? 30 seconds.
Yeah. Look, Visa, accounts for about 40 to 45% of the credit card market. And, since listing in 2008, this is a company that has been growing earnings in the region of 29% and dividends in the region of about 33%. Going forward, I still think that they will be able to maintain their market leadership, especially when it comes to, mobile payment systems. And, this is a company that would continue to deliver good dividends as well as, earnings growth.
Now, you're in the retail sector. You understand the retail sector. Sid, you've been watching the retail sector for years. You've seen the evolution of how credit cards have changed consumer spending.
Absolutely.
And the only people who make more money than asset managers are the credit card guys, because they can cut up everything.
Number one, the credit card guys have hit some headwinds in America with regard to the commission structures. I think where those commission rates have had to be brought down. And secondly, a number of months ago, I bought Visa when I was against another competitor, and the share price was then about $200 a share. I looked at it in the last day or so, and I see it's gone up to $235. For a share to have jumped nearly 20% in a space of like 2 or 3 months or something, I think is too much.
So he's praising his own pick. He was the genius who picked it at 200. It's run to 235.
It was my competitor.
Oh, was your okay?
It was my competitor.
But you accepted it then.
I accepted it.
Yes.
But I'm not prepared to accept it
Again.
at the current price.
Okay. So although you accepted it a couple of months ago at 200, at 235,
and I do have these reservations, these fears about commission structures. There was something against American Express the other day, I think, as well.
Yeah, but American Express, come on, let's be honest about it.
It's something that affects the entire industry.
Yeah.
That's why I'm a little bit reluctant, on pricing. I'm not prepared to buy it at this price.
But aren't companies like Visa and MasterCard protected and cushioned because of the huge gap there is in commissions between what they charge the retailers versus what Diners and American Express charge?
Oh, yeah.
No, Diners rates have been brought down. Diners rates are pretty close to.
Can you still get anybody to accept one, though?
Yeah.
Well, that's part of your problem.
Yeah.
American Express, and as you know, I have retail interests, so
Yes.
I know about it. American Express are up there at 5%, and they won't budge. Where the other guys have come down to anywhere from 3.5% downwards.
No, look, if you look at Visa and MasterCard, they're sitting at anywhere between 1% and 3%. And this is a company where you're getting a return on equity of 20% and return on capital.
Is that sustainable, though?
It's sustainable, especially if you consider what Apple said in September, just a month ago, when they released their iPhone 6, that there will be a new app called Apple Pay, where they will be using Visa as well as MasterCard.
They will use that infrastructure because that infrastructure is everywhere in the world.
But remember that 27 million small businesses in the US at the moment, do not have, a credit card facility, and that is where they are going to get the masses, and also to be able to tap, the unbanked as well as the underbanked people.
And also we've got great innovators, South African innovators, with the what's it called, the Pebble, which is being used by ABSA, which is now being used by ANZ in Australia. That's a South African innovation. Attach it to a mobile phone, swipe a credit card. I think the credit card industry's got a big future. You're not prepared to pay $235 for it. No. You were happy at 200.
Don't worry,
235 is too rich.
He'll be prepared to pay 300 in a few months' time.
We'll see.
I can't wait for that moment. Now, Kgantsi, I'm afraid Visa is shot down. Let's go to the final pick of the evening, Sid Vianello. You know the sector better than probably half the people running the company. Certainly better than the executives at African Bank did when they were running Ellerines.
100%.
But you're going to one of the beneficiaries of the Ellerines fallout, and it's not Lewis Group, it's the battered one. JD Group.
Correct.
Why is JD Group worth a buy right now? 30 seconds.
Very simply, the biggest furniture retailer in the country now faces the wonderful prospect of 20% of the industry stores closed by the end of January. And in fact, what they're going to be selling for November, December and January is all the old stock that's left. They're not buying any new stock, so they're getting rid of all the rubbish between now and January, which probably isn't good quality stock in any event. And so with 20% of the industry up for grabs, defaulting to the players who are left, JD,
I know time's
and
up,
for
but
that
he's
matter,
interesting. My
and for
producer's
Lewis,
shouting me
and
that time's
Lewis,
up, but I'm
and
liking
Lewis
what
for
you're
that
saying.
matter, and
Okay,
Lewis for
we're
that matter.
cheating. We're cheating, Sid. But I'm liking the logic. I'm liking the logic there. And logic beats the gong any day of the week. So we're cheating a little bit. Sorry.
But here's another part of logic.
Okay.
An average South African consumer spends 80% of the disposable income
Just servicing debt.
servicing debt, and the top priority would be your house and your car, I don't know how much more breathing space, they still have, for Ellerines, sofas,
that's
and
the
so
big
on,
argument against this pick for JD Group, that anywhere, whether it be microlending, and Capitex were looking to push $300. That's an interesting gravity defier. But the furniture retail sector, it's an optional purchase. People are hugely indebted. We talk about average consumers, 80%.
But wait a minute.
The JD Group customer is sitting at over 100.
But it's been an optional purchase for the last 50 years. It's not, that didn't change overnight.
No, but
it's always been an optional purchase. It's always been a discretionary purchase.
But we've never had debt levels as high as they are now.
Correct.
Yeah.
But now with 20% of the industry disappearing, the industry can drop 20% and everybody's turnover will still be exactly the same.
Fair enough.
I don't believe the industry is going to collapse to the tune of 20% overnight, which means that the incremental business will default to the brands who are left. And with JD, in my view, about to go through a similar kind of store rationalisation program, although obviously at a much slower and more measured pace. We will eventually have an industry with 1,000 less stores.
I think it's a compelling
which I
argument.
believe
And that
will be
is
good
in
for the
8 years'
industry.
time.
In a compelling argument, you're not prepared to buy it right now.
I'm not, you know.
You would rather go and buy an Elderines couch. You would rather buy an Elderines couch than buy a JD Group share.
Oh, of course. Get it for free. As he says, it's rubbish. I'm prepared to get that rubbish.
Well, if you go and buy it between now and January, it's going to be rubbish.
Yeah.
Because you know it's old stock.
Yeah.
Gentlemen, we must leave it there. You shooting him down?
I'm shooting him
You're
down.
shooting him down. What a lovely program we had this evening.
I have to apologise to the business rescue practitioners, Mr. Les Madison and the other gentleman, I've forgotten what his name is.
They didn't buy the rubbish. They didn't buy the
by
rubbish.
saying it's rubbish, but we all know the reality is it's old stock.
Yeah, you don't have to apologize for
too
who
late.
you are. You know?
The one needs to move up from the bottom of the log, and so Twitter, go ahead and do your best and vote for him. Be it a tweet or a retweet, as long as we see a hashtag, we'll count it as a vote. And the lawyers' letters are already being typed up furiously as we speak this evening. Voting closes Sunday midnight. Follow at SSO League and use the power of the hashtag. We'll be back fists flying Tuesday with match day number 30 right here on CNBC Africa at 8:30. Until next week, do stay cutting. Stop hurting each other. Stop it. Stop it.